Stock nerds, market lovers, we have a lot to talk about. Big inflation number, but it's not just, hey, reporting the inflation number. I don't think people come to this show. If you want the news, I tell you, go watch the news. What you need is interpretation of the number, where markets are could be headed. I don't want to say projected to be headed because that's not what we do. We're not prognosticators. We're just interpreting the analysis given by price.
Right.
Otherwise known as technical analysis.
Yes.
And I want to show you a bunch of things here before we ease into the show. But give me a shot of Hunter.
Oh, Hunter?
Yeah. Please.
This-
Thank you.
this-
So
this
right
right
before
here?
we started, hey, Hunter. Right before we started, the fifth Beatle, Hunter Mozingo, was on camera with Zach. And Zach is like, hey, we got to get you some art. And so, hey, let's get you some art, man. And then it dawned on me that, Zach goes, hey, we should get him the art that Danny has. And Danny doesn't have any art. Danny just has.
How dare you?
calling what Danny has on his walls art.
Man's office is full of
is
color.
an insult to art.
Yeah.
So, but Zach then goes, we should get him this because Danny has 2 pictures of Andre Agassi. Like,
They're the same photo.
They're the same photo,
But he
right?
has two
Two
copies
of them.
of
One
them.
at the home office and
Right.
one at the office
both
office.
framed, both in different
framed,
offices.
both signed by Andre Agassi. It's pretty interesting. So, but then I think what we should do is give me Hunter's shot again.
Yeah.
So my original thought was we get Hunter a piece of art that every week is more decrepit than the previous week.
Sure.
Right? But then it's like, no, we should get Hunter 8x10 glossies of tennis players.
Just stick them on the
Just
back.
stick them on the back wall every week, and not say anything, or have them in such a way that it's so obvious to everybody else watching. Because I've got the next cup of coffee that Danny will never notice.
Right. Oh no, it would take him months
Years
to notice like art on Hunter's
Like you
walls.
would
Yeah,
hear some
100%.
kind of Yosemite Sam voice going, Hunter, you got some tennis players back there?
What is that back there?
Yeah,
Yeah.
like, and it could be like John McEnroe from the early years, like the early 80s,
Sure.
and then like John McEnroe now.
Yeah.
Yeah.
Maybe
Or-
we could just get him like a giant blow up version of it from Kinko's, send it his way. He could hang it on the wall like huge.
Like a fat head?
Right. Like make it really
Yeah,
like
fat head,
overwhelmingly
there you go.
obvious. Yeah.
Yeah, I just don't think Danny would ever notice. Like
I don't
the ever
either.
like a 8x10 of Martina Navratilova.
Danny's a numbers man. All right. He's focused on the work. And good for him. By
After
God.
he catches on to the joke, he'd be like, hey, can you send me those?
Oh, for sure.
Yeah,
Send
absolutely.
those back my way.
So anyway, stock nerds, market nerds. Look, CPI number came out. Core CPI number came out this morning. By the way, I'll forget to tell you. Next week, Fed meeting on Wednesday with the press conference afterward. But here, just Zach, can you get my screen here? Lickety split. Look
With the notifications on?
Yeah.
Okay. I didn't
Yeah,
know if you
please. No, thank you.
I was like, do you want people to see those? All right.
No, I do.
Yeah.
I specifically screenshotted them.
Yeah.
So this is it. You didn't need a government report to tell you it's bad. That's what I really want to talk. No, that's not what I want to talk about. But it's interesting. It's so front and center now. And you're like, Tim, you follow a bunch of news services. I do that for this reason right here. Like when there is big news or what is deemed to be big news, it's always, this one is wrong. This one had I don't know. Okay, they got me there. It was an inflation one from the Wall Street Journal, but then they must have covered it up with a lack of COVID testing. But trust me, the Wall Street Journal had the same story. This is bad, right? Like inflation, 40-year highs, not seen since 1981. And that wasn't known as an economic hotbed. 1981. It was when we talked about it last week, and we've been talking about what feels like ad nauseum for 6 months, 7 months now, 8 months about the inflation issue. And I know this isn't a told you so moment because I don't think there's any that doesn't help anybody. But what you're seeing now, though, I wonder, Zach, I'm going to build a picture here. I hesitate to say it. Are we peaking?
Oh.
And
an optimist.
No, I wouldn't even say it's optimism.
Well, I mean, peaking implies that we're about to hit the turn and go back down.
I'm not
right?
saying next month's going to be better.
Okay.
But there's a couple things that I'm seeing, and I want to point them out.
Yeah.
And I think they're interesting. It doesn't mean that, well, Jim said that inflation's peaking. That kid don't know diddly squat.
You can hear the emails already.
Right.
People people in the comments.
Yes, and so look, I'm going to point some things out to you, and hopefully they're informative, and maybe it gives sign to that could inflation be for the moment peaking. Now, look, a lot of things have to happen to have it go the other way, but it doesn't. Inflation peaking means that maybe it just goes sideways. It remains persistently high.
Right.
Yeah.
Maybe it's a real flat peak.
Yeah. It's not the grand Tetons. When you scale it, you go down. No. We're just there. We're plateauing. Maybe I should say plateauing.
It could be a plateau.
Plateauing might be a better way to describe it.
Yeah.
Can we get a plateau and a peak in the?
I'll put Andre Agassi on.
Oh my gosh, let's get Andre Agassi, Martina Navratilova, Danny Yosemite Sam with the tennis racket.
Okay.
Yeah. We'll figure this. We'll figure out the art. If you don't know what I'm talking about, Doctor, you go to Revere Asset YouTube. We do an art file. Well, it's on the podcast too. Hold on, let me show you. Go to Revere Asset. Tomorrow's Insights is what we call them. Choose the podcast, and you will see they're like it's like
go ahead.
It's like Art Deco, not Art Deco.
It's a very personality oriented thumbnail. Let's say that.
Yeah, and so we try to give you a clue what the show is about. It's a game within a game by looking at the art file, and then a lot of people like to play along. So anyway.
Now, are we going to go with the old long-haired headband Agassi or the latter-day shaved bald Andre Agassi?
Both.
I want to try. Well, that's not bad. I want to try to find the photo of the Danny's got, whichever one that is. He's like mid-swing, his sweat's flying off his forehead.
Like a Wimbledon.
Yeah, you know what I'm talking about.
Yeah, like a Wimbledon Andre Agassi.
Action. People click on action.
Oh, well then Andre Agassi in action, right?
It's the only way.
Danny running after him for his signature. That's some action.
Perfect.
So I want to build this up, but real quick, you know things. Let me show you just how bad things are. I've lamented that John Ehrlichman on Twitter is a great follow. Okay, and here's the price increases just in the past year. 49% on gas. Look at. I mean, he's going worst to best. Baby food 13%. Cars, pickles 12%. Peanut butter 12%. Paid more for that jar of Jif. But this right here, the gas and the airline ticket, this is what's going to really. I mean, obviously a bunch of things like food are going to hurt the economy, but if people, I'll build the picture up here. But if people stop commuting, that's going to cause a drawdown in demand for petrol. And well, why would that be? Airlines are, all the planes are sold out. Well, there's less planes in the air. Okay. Hotels seem to be doing well. Maybe their stocks aren't, but they seem to be doing well. And I think if you take a look at it, like what's happened during COVID, right? The work from home movement is not foreign. It's ops normal.
Yeah.
And so if people have the opportunity to not have to drive, no matter how far into the office, that's less petrol being consumed.
Yeah, if you're gonna have families second guessing the summer road trip, hey, it's a real long drive. Maybe we should stop somewhere shorter.
Right. It'll be super interesting to see this. And so, I mean, but these price increases. But you might think they're bad, but now I want to tell you that you're not wrong. The rest of the world thinks they're bad too. And by the rest of the world, I think it's one of the most important consumer sentiment surveys in the universe. It's the University of Michigan sentiment number. And it is at its lowest level since inception. Since 1980. I believe since inception, but the lowest in the middle since 1980. And I'm going to tell you that I've done a ton of research on this. Consumer sentiment precedes market movement lower, okay? But this has been trending lower. Like we've already had market movement lower. It doesn't mean we can't go lower. But this consumer sentiment survey is the worst since 1980, which is interesting. This is worse than when COVID first hit and everything shut down in March. So not COVID when they stimulated the economy with checks, but when COVID hit and they were shutting everything down, no more NBA games, no more sports, nothing. And the consumer survey came out. This one that was just released this morning, June 9th, June 10th. We're in June 10th, right?
Mm-hmm.
Friday, June 10th, when we're taping this show in the morning. This is the worst one since the middle of 1980. Can the consumer get worse? Listen, I'm going to tell you, it can always get worse, right? Like, just because prices fall on X% doesn't mean it can't fall another X%. Matter of fact, we've done that show. If you go to Revere Asset and you go back to Tomorrow's Insights, we actually go over in shows and podcasts 400, 401, 402, and 403, just how much further markets can fall. And we've done that. And so I don't need to rehash all that. But I wonder, is this the peak for the consumer sentiment, like the inverse peak? Is this the trough? Is this as low as consumer sentiment's going to get? Think about it. It's 2008, Zach. We're having the worst economic recession since the Great Depression.
Yes.
And consumer sentiment wasn't as bad as it is this morning, according to this. What's changed? I mean, we are not even in the worst recession since the Great Depression. And yet this is low. So is this a forebear? And I don't know the answer, but I've got some thoughts. Is this a forebear to things to come? It's going to be worse, which, by the way, could always be that way. But it's kind of, if I told you what would be worse, the consumer sentiment in 2008 or consumer sentiment in COVID or consumer sentiment right now, I mean, I think a layperson might choose 08, right?
I wouldn't guess now out of those options.
Yeah.
No.
But this number is lower than now. And so, look, I'm not an apologist for this economy. Anyone who's listening to the show knows where I stand. I'm a man of the people that listen to this show. I'm popular. And I'm certainly not an apologist for poor decision making by people that could have affected this differently. But this, my gosh, is shocking.
Not a lot of confidence in the market.
No, and why is this a forebear why could this be a forebear to things to come? Because stock nerds and market lovers, that the economy that we live in is 70% consumer driven. We're a service-based economy. We're what would be known as an evolved economy, whereas we're not an industrious economy, where the economy in China is industrial. But we want to pay other people to make our things, and we want to consume them, and we want to pay people services. That's what we do. And if there's no confidence that the economy is going to grow and be strong to support those habits, then people are going to obviously rein in. And I'm going to tell you that I have a small thought, Zachary.
Okay.
Small belief. Do you know what happened to Target, Zach? Let me show you a chart.
No, what happened to Target?
Welcome to Target. So that's there's a skit from Saturday Night Live.
That was
yeah, if you can find
SNL
that person
reference.
who I don't know her name, but she's a checkout person at Target. Welcome to Target, and she's like from Minnesota because Target's from Minnesota.
Gilda Radner.
No, it's more recent. It's like early 2000s.
Oh, okay.
Early 2000s. I Molly Shannon. I made that up. I don't think so.
Yeah, it could be Molly Shannon.
Really?
Yeah. Yeah. Molly Shannon did a lot of. Yeah. That actually sounds like a Molly Shannon bit.
Oh, really?
I mean, who's to say?
I don't know.
Amy Poehler?
No, Tina. No.
Kate McKinnon?
No, not Kate McKinnon. No, she does real estate commercials now. So she does. So here's Target, and there's this big gap down earlier. Don, when was the announcement? Why does this chart look funny to me? That was earnings. It was earlier this week, right? Target had the gap down here.
Hold on, I can bring it up.
Yeah, like my chart is like askew, and I'm like, what is wrong with me chart?
Yeah, on the 7th, but then it finished at the highs
Yeah.
of the day. And people were like, oh, things aren't as bad as it was a great reaction, well off the lows.
So what did Target say? They said that they have excess inventory.
Oh, yeah.
Right. Oh, yeah. So
I saw a video
and
about
so
that.
they said, hey, man, turns out people aren't buying as much as we thought. And we stocked up because it was COVID and we had supply chain issues. But now the market's changed dramatically again, and we have too much inventory. And their stock like sank pre-market, but then it recovered, as Don mentioned. It was fine for the day, but it was a big deal.
And that's 3 weeks after their earnings report, where they
Yeah.
already said things were bad, and they didn't think, and they deteriorated that quickly over 3 weeks that they had to come out again
And
Wow.
that
and discuss it.
And right there is my point. What Don has mentioned. This number, the CPI number, is much older. They didn't just compile this report in the last couple of weeks. This number is much older. It's very rear view looking. Okay? It's when I say much older, it's last month. It's May. But they didn't just start working on this report June 1st or the 31st, which was like last Tuesday. They started compiling these numbers from the beginning of the month, probably to the middle, third week of the month, and they got to get the report together. Target came out probably well after this report was in its final stages. And so what I'm saying is, has consumer sentiment, has the consumers clearly turned already, is the consumer sentiment survey that's been released, is this the trough? So then you take the inverse of that. If consumer sentiment is the trough, lowest since 1980, worse than COVID before stimulus checks, worse than financial economic recession, destruction in 2008, worse than 1999, dot-com implosion, worse since 1980. And Target comes out and says, hey, man, we got too much stuff. We're going to discount it. And I wonder if that means, okay, the Target is first and foremost, right? 3 weeks, as Don mentioned, after their earnings report, they're like, dude, we better warn now. Like, they're like, let's warn now. Oh, by the way, did anybody else see that Target raised their dividend this week by 20%? They warned on excess inventory, but Brian Cornell, CEO of Target, feels so, I got Hunter, not with the joke, but with the fact. Either way, I got him.
Yeah,
and so that's all that matters to me, is that I got Hunter.
Right.
And so I can always tell. I like the Hunter reactions.
You've got an audience.
That's exactly what I'm talking about. And so like Brian Cornell feels so strongly about the second half of his business because he got out ahead of this inventory thing that he raised his dividend by 20%. Boy, that's something.
That's something.
Yeah. And so he needed to get rid of the stuff that's not selling right now. TVs, Blippy toys. Anyone who has kids knows what that is. And he's like, I got to get ready for back to school. I got to get ready for fall. I got to get ready for holiday. And so he's got to clear it out, right? Old stuff's got to go because new stuff's coming in. Sunday. Come down to the big sale. Target. And so have we...
That's a shameless attempt to stop the bleeding of the stock price and to make the yield look...
Could be.
Yeah.
Could be.
Get up to 3%.
Could absolutely be. That take could absolutely be true. I'll tell you what, that is dangerous ground though to walk on. when your business could be falling apart and you raise the dividend. That is treacherous ground for somebody to walk on. And so it makes me wonder what is peaked? Has anything peaked? And I want to look at the dollar. So let's take a look at the dollar here. But I think it helps to look at the dollar on a daily chart through the lens of an ATR. And so everyone's seen me do these ATR charts. If you're new to the show, email me. I'll send you a primer on the ATR charts. But let's look at Dixie. And the market, Dixie, and we've talked about this, dollar goes higher, markets go lower. And you can see over the last couple sessions here, 1, 2, 3. When is the market really falling apart? The last couple of sessions. And look at the dollar. Up to the second ATR. And so could it get to the third ATR? It could. The move, though, I'm telling you, the move, and it's got to the third ATR here and then falls a little back, third ATR, and then it really pulls back. I wonder if this is the move. Like it was kind of here, 2 ATR. I would have thought that the way price action is happening in the indices, And anyone who's watched any of my videos sees me do this relationship. When markets are sharply lower, dollar is sharply higher. And it's up 2% today. So that is sharply higher. But I would have thought in the last couple of days it would be at the third ATR. It would be 3 times the normal movement. And it's not. And I'm like, oh, a big old hammer candle there. Maybe it does go higher. But it's actually come off a little bit this morning. If I can get my mouse anywhere near, there we are, to select a time frame. You can see it starts here, it travels, and it's not at its high. And so it's not just, I mean, it's up 2%. It's a big, but it's not relentless. Maybe it pulls back. How about TNX? They go hand in hand. Well, what's TNX? TNX is the interest rates, right? 10-year Treasury. And you read this chart. So TNX was initially lower, but now it's 3.148%. And you can see as the TNX goes higher, what happens to markets have gone lower. I don't need to show you a chart of markets going lower. You know markets going lower. I mean, this is a 3% move in rates. These are monstrous moves. These are ginormously big moves. The dollar up 2%, 10-year Treasury, I mean, rates up. This makes the cost of everything higher. So when the dollar goes higher, you're like, whoa, you get more buying power. It's being trumped by these rates. You're going to get higher credit card debt, and we've got some credit card debt issues. Everything costs more because this TNX is going high, this 10-year Treasury rate. And we've already lamented. We could do ZB if you want to. 30-year Treasuries. And you can see 30-year Treasuries are actually lower today. But the 10-year is higher. And a lot is keyed off of the 10-year, and that's why I talk about it. And so where does that leave? Where does that leave all markets? So it makes me want to know like a little bit more about the sentiment of the investor community. Okay, because we're at 39 of 0, we're at 3,900. So we're just at lows here as we come out of European close. And so for the first time, now we've got dollar spiking into the second ATR. We've got yields doing the exact same move. This is the highest. I enabled my marker. This is the highest at 1.23. Put call ratio has been in all of 2022. And I think that's important. It doesn't mean, you're like, well, what's this spike here? I think that was an anomaly. I've seen those candles before. I don't believe this candle to be true. I could be wrong. I've seen it before. This dollar right now, this put call ratio, meaning that there's so many people bearing up now. And they might be, it's not that there could be, they might not be right. Maybe the big drop is to come. But this put call ratio is the highest it's been in all of 2022. And what is that? And oh, by the way, a little subtlety here. As the markets were receding this week, look at the trend of this 10-day moving average that I lay over the put call, pointing down. Only now do you get it pointing back higher. And it's at what, 0.84? When you see it encroach 0.9, that's a good sign for bulls. High put call ratio, a higher 10-day moving average. And what does that mean? That means that in the rowboat, that is the markets. So when the put call ratio is down here, everybody's bullish, right? But you can see how that worked out. Everybody's bullish, 10-day moving average heading lower, everybody's bullish. And so when I'm looking at the boat here, everybody's on one side of it, on the bullish side. What happens? It tips over, and it tipped over to the downside. But now we got that same boat. Well, okay, that boat is, what kind of boat is that? It's like a pork chop or a ham. It's not even close to looking like a boat. But let's pretend it's a boat. Now everybody's on this side, and that's the bearish side. What's going to happen? There's a really good chance that you do this. Well, put call ratio was high here, sideways to slightly higher movement. Could this be the whoosh that we needed in markets? Perhaps. We'll see. Next week's a big week. I believe it's options expiration. Third week of June. Big week with the Fed. I'm going to try to tell you that there's a soft landing out there for this big old ship that is the United States stock market. So I wonder if we've chopped or wonder if we've peaked momentarily, hit a trough in consumer sentiment, and then I want to show you this one last thing before I turn it over to Hunter. That means I'm coming to you, Hunter. So
I'm ready.
All right, man. Let's get SPX.
Coming at you fast. Yeah.
Coming at you fast on a Sunday. I want to put this on a weekly time. We're at 39.02. SPX. And by the way, if anyone mistakes me as sounding bullish, no, you don't hear it. Don't misinterpret my words. What I'm about to show you is what I think is what's happening. So here's the low. Right here, the week of 5/16, 38.10. Now maybe we're headed there. Maybe we're not. But I think, dangerous words in the market, right? We just may be in a violent flat base. Now, this is bearish. There's nothing good about it, right? So take that for what it's worth. But a flat base, and if you don't know what a flat base is, let me pull this up real quick. If you're not familiar with what a flat base is, it's one of my favorite chart patterns. 3 weeks tight flat bases are my favorite chart patterns. They're defined, as being 5 weeks minimum, and you can find this on the investor. I'll put a link to it so you can read about it. 5 weeks minimum time frame, no more than 15% depth, peak to trough. Okay. And so when I look at this structure that's taking place on this weekly chart, I'm seeing a flat base. 1, 2, 3, 4, 5. You want to call this week? Sure. 6. We're 6 weeks into it, 5 weeks into it. And this is about 5. Let me see what the range is. I can do it from here. It is about 9.9%. Maybe we'll just call it 10%. It's not 15%. And so I wonder, maybe we get down to this 38, 15, 38, 10 level, but I wonder if this is just a flat base that's testing this bottom range. Come up here and test out the range. It's still not determined how this flat base resolves. And I wanna really emphasize this, because today is a day that it's good to be a bear today, right? That market's down 3%. S&Ps are down 3% right now. Today is the bear's day. But it doesn't take much with a high put call ratio and a majority of the market bared up to ignite one of those fierce short covering rallies. Doesn't mean anything has changed with the economy. It doesn't mean gas prices go lower. It doesn't mean that everything doesn't cost more. Speaking of everything costing more, Zach, are you familiar with the McFlurry? McDonald's McFlurry?
I am familiar with the McFlurry.
Right.
Sorry.
So last night,
go ahead.
Last night I did a project with the Remster at his little school, and it was cool. We made paper football, analog football, right? Like you put it together.
Analog football.
Analog
That's right.
football.
Yeah. Football the way it was meant to be played.
Exactly.
Physically.
On a tabletop, kicking a football. And so I'm like, hey, man, that was fun. You want to go get some ice cream? Sure, man. So I was going to get him a cone at McDonald's, right?
Oh, no.
But
Okay.
I walk in, I'm like, McFlurry? It's like a Blizzard, except I didn't have to go to Dairy Queen.
Sounds amazing.
Right.
You
By the way, the
Oreo
Dairy,
mixed
can we
in?
does anyone else's Dairy Queen smell awful when they walk in them? Or is it just the ones in Texas?
We have a local Dairy Queen. I've never been in it. Don't drive.
Go smell it.
Yeah, all right.
I don't-
show research.
I'm not
I'll
not
report
being
back.
I'm
Go
not
smell
being
go smell your local Dairy Queen.
That's exactly
That's
it.
right. Give it a whiff.
I'm not going to lie. I don't enjoy, I think in terms of parlance of cleanliness, service,
Yeah.
Chick-fil-A, man, rules the roost, right? Yeah, like it's hard to have a bad experience at a Chick-fil-A, but because they've got some really interesting standards, like good standards.
Yeah.
Dairy Queen does not have these standards.
No.
No. And anyway, I stopped going to Dairy Queen because I didn't enjoy the smell when I took the kids in there. I'm like, why does it smell so awful in here?
You gotta hit that drive-through. It's the only way.
Well, yeah, I know. Not a fan.
The Blizzard's solid.
I think the Buffett owns Dairy Queen.
Warren Buffett?
Yeah.
Really?
Yeah, Berkshire Hathaway owns Dairy Queen.
I didn't know that.
Yeah. Not sure the complaints. I'm not sure if maybe his Dairy Queen is like pristine. You know, Ford had this issue where for years, Ford
had this Dairy Queen issue?
Well, I don't know if Ford
don't
smelled.
believe
If
it.
anyone's going into Ford's headquarters and it smells like a Dairy Queen,
Yeah.
they probably got problems.
Sure.
But Ford in the 80s, right? Their CEO always had the greatest. He didn't understand what the problems were with his vehicle because every day his vehicle was being tended to, whether it's being wiped down or mechanically ensured it mechanically worked.
Okay.
So everybody else is driving Pintos and whatever from Ford, and they're like, they keep breaking down or catching on fire or whatever. And the CEO had zero. He was oblivious to the issues with his cars because his cars were always great, right?
Yeah.
I wonder if Warren Buffett has that. He stops at Dairy Queen, gets a Blizzard. It's like, oh my gosh, this place is great. Like he needs to get out of Omaha's. Like
no way.
He needs to come to the Texas Dairy Queens and take a sniff.
The Dairy Queens I've been to of late, they're not that nice. They're
Thank
pretty,
you.
Yeah.
By the way, these are new Dairy Queens. These aren't like old Dairy Queens.
I don't know if I've ever been to a new Dairy Queen.
These are new, and somehow they impregnated the smell of. And you're like, Tim, what could it smell like other than ice cream?
Sour dairy, right? That's
no. If you took sewage,
okay,
and then you mixed in
hold on,
fryer oil,
it does not smell like sewage in Dairy Queen,
and then Axe body spray from
Yeah.
the teenagers working there.
Okay, I'd believe that.
Put that together.
Sure.
And then like smells like chicken tenders, rancid oil.
You two so you went and got a McFlurry.
Oh yeah.
Was the ice cream machine working?
Thank you. Oh yeah.
McDonald's
that's a whole issue,
notoriously
right?
has non-functioning ice cream
Oh,
machines.
it's a
That's where I
whole-
figured this was going.
It's a whole thing.
Yeah.
So yes, back to the McFlurry.
Yes.
So you want to talk about inflation?
Oh no.
If I would have seen the price before this, I would have maybe thought my choice. The McFlurry was no bigger than my phone, like
Sure.
size wise. I'm
Right.
not being
Which is
facetious.
plenty of ice cream. That's fair. Sure.
No,
Well, okay.
no, not for the almost $4 I paid for it. It
Oh,
was
God.
$3.89.
Really?
It was $4 after
With tax. Yeah.
And it's like, well, gee, well, you live in New York City, you're big city. No, I live in rural Texas.
Yeah.
Right?
McDonald's.
It's
You're
McDonald's.
not going to the Ritz.
It's not. Thank you.
It's
I mean,
McDonald's.
this wasn't some like they didn't go out and hand milk the cow prior to
No.
putting it in the flurry. The McFlurry, by the way, ingenious on McDonald's part. Could they be even more stingier with their Oreo cookie in?
They put like one in there.
Oh
Yeah,
my
like
goodness
one Oreo
gracious!
cookie for
I'm
that whole
looking. I'm
small.
like, are you the person who's responsible for accounting for every cookie crumb that goes in this McFlurry? Put more in there, McDonald's. Let's get a complaint. Dairy Queen, McDonald's. Anyway, so a person puts the ice cream in there, doesn't fill the thing up, and she goes, "Okay, that'd be $4 whatever." And I'm like, "You're kidding me? Like this size?"
Yeah.
And she's like, "Yeah." But the McFlurry's got a plastic spoon, right?
Yes.
And then they put it into the machine, like in the end of like a blender head, and
Yep.
the spoon does the stirring, not some kind of blade whip.
Yeah.
But that was ingenious.
Yeah.
Maybe that's what I paid for, like a show of watching how this plastic spoon can mix a concoction that costs McDonald's 29 cents.
Peering over the counter, watching this poor person mix your McFlurry.
I said to her $4, and she looks at me and goes, "I just work here. I don't price the food." Like she must hear it.
I mean, yeah, that's true.
She had a response that, and I didn't say it meanly. I was like, "Are you sure
Like
that's
$4?
Did we
Yeah.
ring this up properly?
Right.
Did you give me like 3 Big Macs with this?" Like, astonished.
Yeah. Uma Thurman's milkshake in Pulp Fiction was $5. And that was like a deal, right? They had a whole scene. John Travolta's like, "That's a $5 milkshake." She's like, "Well, yeah, it's good, right?" Like, oh, that the 80s? Now we're McDonald's? They're coming up on $5?
Are we calling Pulp Fiction the good old days? Can we get John Travolta with the dance on the?
For sure.
Thanks.
Yeah.
Be
I'll
awesome.
be drinking a McFlurry.
Hey, I told you I was coming to you, Hunter.
You did.
Hey, by the way, inflation is at McDonald's. If Dairy Queen smell where you're at, let me know. As a matter of fact, let Dan know. Dan at revereasset.com, and maybe just put in the subject, "My Dairy Queen smells." We won't tell Danny that we talked about this on the show, because here's the thing.
We'll find
Danny won't listen to the show. So let's just set Dan up for success here. So Dan won't listen to the show. And if you send him email after email going, "Hey, man, hey Dan, Bob here. My Dairy Queen smells too. That would be fantastic. And let's see if we can jam Danny's inbox with your inflation stories and if what fast food restaurant by you smells.
What flavor McFlurry do you get? Right.
You know what?
Right
We'll
in now.
compile all those emails into let's see if Danny even tells us. Right? Will he even admit?
So quite the game of telephone.
Will he even
pulling
tell
people
Hunter
into.
and Don and I that he's getting these weird emails about Dairy Queen smelling in all these different states across the country? It's dan@revereasset.com. And if you've experienced price inflation with your McFlurry and then you're quite shocked by it, send those emails to him too. See what I did there? I also have Don, myself, and Hunter's email address.
You did plug the show?
Yeah, you see, that's how you do that.
That's
like
right.
you make it look like it's about Dan, but what you really did is get the other guys involved with their contact information
The
and
audience
how you
didn't
can get
even
the
know.
call. They didn't even see it coming,
No,
dude.
we
See,
cheated you.
that's a trick that you only get at the Connecticut School of Broadcasting upstairs. As we now gave Hunter a couple times to get his thoughts together, and we say, Hunter, what would you like to talk about stock?
Yes. Well, you stole a little bit of my
Oh, no.
thunder there, talking about the dollar. And the reason being is the dollar is one of the best looking charts in the market right now. Obviously, the last couple of days, like you showed on the charts there, it's gotten a little bit extended. It's kind of made a pretty decent move. But the point being, and I know we've talked about this a lot, is as long as that dollar chart looks bullish and is doing what it's doing now, it's going to be tough on equities, at least in the near to intermediate term, to have any type of sustained momentum. And like you showed on the charts with the dollar, we got a little bit of a pullback. And sure enough, kind of coinciding with that, we got a little bit of a relief rally in the markets too. But as long as this continues to look like it does, meaning a constructive bullish chart, it's going to be tough for U.S. equities in particular, especially your more techie type of names. Obviously, the Qs are having a tougher time this year than the Dow or the S&P. But that's just what I wanted to point out on the dollar. Is the last couple of days that move has kind of been confirmed as far as kind of the bounce off the 50-day. If you look at UUP in Market Smith, for example. But moving on from the dollar, there you go, Tim. You can pull it. It was same chart, just a different name, more or less there. But I wasn't planning on talking about this one, but it caught my attention as I was doing some scanning while Tim was talking about Dairy Queens there.
Yeah.
Gold, GLD, is putting in a big candle today, getting back above some key moving averages here. Really kind of has accelerated here in the last hour or so, but had come back down below the 200-day, the 21, the 80 MA, but a big candle today with some pretty decent volume on GLD as well. So another chart that maybe could possibly start to shape up. The 50-day is a couple of percent overhead, but this is what you want to see if you own gold or if you're watching gold. This is the type of undercut and reclaim of those key levels, those key moving averages that you would like to see, specifically with big time volume as well. So GLD possibly starting to come to life a little bit here after kind of basing all around this 200-day moving average. And then I'm going to talk about two more stocks, Tim, and then I want to talk about some fib levels on the Qs and the S&P. So the two stocks I've talked about in exhaustion this week, but I think it bears repeating and looking at these charts. Tim, will you pull up Apple? So in Monday's video, I talked about these recent lows being right around 144 and 145, that kind of range right there. If you look back to like 6.6, 6.7, kind of all in that range. And that was a big level. And what we talked about on Monday was if you're a bull for Apple, if you're bull for the market in general, you need Apple to act right, really. You wanted to see those levels, that area kind of hold and a reclaim of the moving average, the 21 and the 8, and you got that, but it was extremely brief. And Apple proceeded to be very weak yesterday, kind of leading the indices lower. And then today, obviously, Apple is down again, losing that 145 level, now back below those key moving averages. And on top of that, you've also got the daily stochastic rolling over on Apple. And the reason I think Apple is so important is very simple. It's the heaviest weighted stock in the Qs and the S&P 500. So as Apple goes, pretty much the market is going to go. And that's not always the case. There's nothing that's an absolute. But when you've got a name that's 10% of an index or 7-8% of one of the index, it's gonna move the markets and it's gonna carry it. So here we have Apple coming back down, possibly going to retest that low at 132. This 138 area is a big support level. You can see there's it was a previous resistance level, kind of turned into a support level here. It's a big area for Apple. It has a tendency to bounce here, so we'll see if that plays out today. And the other stock, Tim, is Tesla, TSLA. And the big level we talked about on Monday's video for Tesla was 700, which tried to hold up for a little bit today, but ultimately has given way. I think it's around 688, 687 there on your screen. So Tesla, same thing. We wanted to see the 700 level hold. We wanted to see a quick reclaim of those moving averages, the 21 and the 8-day. We got that. Yesterday, Tesla had an upgrade, I believe, from UBS, moving Tesla pretty significantly in the pre-market up to about 750, and then it continued higher to around the 760-ish range yesterday before it ultimately reversed back below the 21 and right into the 8-day. And then lo and behold, today, with the poor market action and the reaction to the CPI report, we're now back below that 700 level, back below the 21, back below the 8. And you're going to see those short-term moving averages, the 21 and the 8-day, roll over to the downside, barring a big-time reversal with the rest of the day remaining. So two very important stocks to the market. Obviously, there's other names too, Microsoft, Amazon, Google, what have you. But these were the two that I mentioned at the beginning of the week, very important to focus on and starting to break down a little bit here along with the markets. So that's it for stocks. And what I have here on the indices, Tim, is only going to take a quick second. So I'm going to start with the Qs, okay? So QQQ, you can pull up a weekly if you would like to. You don't have to. But I see you've got the fibs on there as it is too. So that bounce that we recently had on the Qs, I'm going to pull this up as well. So I'm looking with you guys here, kind of corresponded to that 50% retracement level from the COVID lows to the recent highs. So that level is right around 285-ish there. As you can kind of see on Tim's screen, there's a fib at that level. But that was the 50% retracement. We kind of bounced in that range, undercut it a little bit towards the 280-ish level. But we came back up ultimately, and it looks like we're kind of rolling over and possibly going to retest those lows now. But what I want to point out is the fib that's below this, the next fib level. So that is the 61.8 on QQQ, and that's right around 258. And I just also want to point out that equates to a 37% decline on the Qs from high to low. So if you look at the 408.71 high down to that 61.8% retracement, that is about a 37% decline on the Qs there. That is the next fib level that could possibly be tested if these recent lows don't hold, and if this recent fib that we kind of tested and danced all around doesn't hold. Similarly, on the S&P 500, if you pull up SPX, Tim, or ES, it really doesn't matter. And Don talked about this a good bit when we bounced off the 38.2% retracement level right there around 38.15. I think the low is 38.10. So we bounced off that level. Ultimately, we ran back up to around 4150, almost up to 4200, and have kind of rolled back over again. And before we talk about the next fib, I do want to say this 3900 level, big battleground level. We battled around this 3900 area a decent bit ultimately before we went and tagged 3810. We were all around 3900 during that, all around those lows. So 3900, a big level here. We're kind of all over the place. Dancing around it, trying to find some support there, at least for today. But the next big fib on the S&P 500 to pay attention to, 50% retracement, 3505 or roughly 3500 on the SPX. So that's the next fib below. The 38.2 held at least for this most recent bounce. We'll see if it holds again or if those recent lows hold. But if not, pay attention to that next fib right there around 3500. Specifically 3505.24, that could come into play. Something to certainly pay attention to. Also, roughly 3500 former resistance level as well, going back to, I believe that's August and October-ish of 2020. So that is all I have. A little bit different than my normal run through, but I thought it could be valuable. So that's what I got today, Tim.
Awesomeness. Okay, I'll tell you what, Don, you want to go over...
I want to comment comment on what Hunter said?
Yeah.
That 3505 level also reflects a normalization of the S&P longer term PE. If you do regression and how PEs expand and contract versus business cycles of boom and bust, we're obviously in the process of them contracting. That 3,500 is I've read several places a realistic target level if the PE of the S&P 500 pulls back to, and I don't have the level at hand, but that's a very realistic target.
So Don has every week. Don does the 21 over 21. It might be 21 under 21, which I think then becomes the Dirty 30, something to that effect. But
Dirty 30's retired.
Oh, Dirty 30's retired.
Aw.
Yeah,
Oh.
retired.
Like were the Dirty Birds the Atlanta Falcons? Was that?
Yes, they were.
Yeah,
Was that Jerry?
That was the Deion Sanders days.
Is that Jerry Glanville?
Yep.
Jerry Glanville coach, Deion Sanders. Pretty sure June Jones.
I think it was Dan Reeves when they went to the Super Bowl that year.
Wow. You know what? It was Dan Reeves. So Don does the video every Friday night. Find it at revereasset.com. And then you just click tomorrow's insights and you'll see we never pull videos down. We never edit them. Once they're up there, that's the anthology. If you want to see how we perform in any market condition, that's where you go to. Pick any year, pick any video, and you will absolutely positively see our work. That's something that nobody else does. You're not going to find that from your strip mall advisor next to the vape shop. By the way, who you should call this weekend and ask them what their sell this week. Don, let's go. What you want to look at?
Yeah, the 21 over 21, all 21 are down today. Shouldn't really be a surprise, and that's a reflection of leaders hold up until they don't. One of the leading areas in the market had been chemicals, which you can look to XLB for particular from a broad perspective versus the S&P, but a bunch of the leading chemical names just getting taken apart today. Bring up Dow, DOW. This is one that from a large cap perspective have been holding up and just fine, but that big red candle that you're looking there pretty much represents what you're seeing in all of them today. The point that Hunter brought up on oil, we had been talking a lot about how the S&P had been trading in this 2.5% range in our videos, and we hadn't mentioned that oil was trading plus or minus $7 from this 1850 level. Can you bring up the futures for GC, Tim?
Yeah, for gold. Okay, go ahead.
Yeah, so you can see that 1850 level. GLD is the ETF, but this better reflects the actual price of gold. So I know you mentioned 3 weeks tight. This is a very obvious 3 weeks tight, and a break above that. Say 18. We're at 1869 now.
Yeah,
is that right?
Almost 1870.
Yeah. So I'm sorry. It closed within plus or minus 7. The range is a little wider, but it was always closing plus or minus 1843 to 1857. But what is the high on that yellow candle?
The high
there, right in the middle.
1878.60.
Yeah, so a break above that, and then you've got the declining 50-day moving average, which is pretty much right around that area. Big outside positive reversal in gold today. Money's got to flow somewhere. It goes to where it's treated best or treated least bad in the case of today. My screen is just a sea of red. We've got CF, a fertilizer stock, up. We've got GlaxoSmithKline, GSK. They had some news. They're higher. NetEase, Chinese stocks. I mentioned this about a month and a half ago. The Chinese equivalent of the Fed is actually easing monetary conditions. And lo and behold, don't fight the Fed, don't fight the communist Fed either. Their Chinese stock charts look better than U.S. charts do right now. But of course, they've got a whole different set of issues if you're dealing with the overwhelming power of a government to make decisions against individual companies on a whim. So anyway, the way we're positioned in-house, when we broke through the bottom of that level yesterday on the S&P that had held up, kind of the FinTwit statement was we would hold inside that level until CPI came out this morning, but a breakdown front ran CPI this morning. We loosened up about a third of our exposure by end of day yesterday and took off 80% of the rest of the exposure with the gap down and follow through to the downside today. So we're on the precipice of basically going net short on rallies of the broad ETFs that we own, which are still DIA and SSO. They rally up into declining into overhead resistance areas. Yesterday and today, the market, yes, we're still on a flat base, but yesterday and today, will be the third straight distribution day on the indexes. That's not your uncle and your aunt selling. That's big Wall Street selling. And we don't predict that the bottom of that base could hold, but a close below 3,900 is another red flag. 4,000 was a yellow flag. 3,900 is a light red flag, and below 3,800, the recent lows is a get the hell out of the way for anything that you've got left in your portfolio, and that's the way we'll be handling it here at Revere. So we're down to CVX, which is Chevron. We're down to GLD. And we're down to TBT, which goes up as interest rates rise. Can you show the charts, please?
Oh, I'm sorry. Yeah.
Sorry.
There.
CVX.
CVX still holding up. There's been some oils actually were green earlier today, but they reversed. So we did sell one of our oil positions yesterday, LNG, when it pierced the 21 and 50 day, which were stacked up. It was a nice setup, and it moved off of it on Tuesday, but then gave it back Wednesday and Thursday, and now broke below it today. We also sold LNTH this morning as that broke down. We sold ON. ON and LNTH were, to me, the two leading stocks in the market outside of anything that's energy related. And one that I held on too long to was ZIM, Z-I-M. When that broke it was sold half on a break of the orange line. It was very oversold. I was expecting a bounce, didn't get it. Sold the rest of it when it broke below at yesterday's open, and we try not to lose any more than 0.2% on any individual position. I think we were 0.4% on this one, so held on to that one too long.
Okay, I'll tell you what.
And that's about it. Certainly not what we want to see. Inflation causes civil unrest. It has ruined economies and countries, frankly, and that's why it's a major concern. And there's talk now about the Fed possibly doing a 1% emergency rate hike next Wednesday to try to calm inflation, because anything that's been done so far sure as hell isn't working.
All right, I'll tell you what, on that happy note, this will be the best transition this show has ever seen. Don, can you
just the facts? You might not like the facts. Don't shoot the messenger, but those are the facts.
Can you do us a favor and take us home? I've got one last thing after we end the show here. Can you take us home as Danny?
I would love to.
All right.
All right, y'all do your
the
thing.
Juxtaposition. Hold on a second.
Danny's head up.
Oh yeah, I'll give Jack.
Give me a minute. Also, Don, don't move your head a whole lot.
Let me vamp.
Try to.
So the juxtaposition of Don's sermon there on it's bad to hey Don, by the way, now that we've ended that, can we do something that's mildly funny? Yeah, and no wonder people hate me.
No, not at all.
Well, I mean, basically what I did was give the market's version of your Dairy Queen story.
There you go. It smells like
I
sewage.
mean, they
Rancid
yeah.
oil, and by the way, the chicken tendies don't even taste good. Like when I suspect what's happening.
You need to go to a better Dairy Queen. This is an ownership issue.
It's
a
I think
management
I think
issue.
it is.
Franchise
It's the
location.
two they own two in the two neighboring towns I live in. I suspect that what restaurants are doing, no proof, that because the oil's high price, that they're trying to extend the fryer oil as well.
All right. I think I got this dialed.
That's a whole. By the way, if you have any fast food insights, complaints, Dan, we're going to compile them. Dan at revereasset.com is how you do that. All right, Don, or I'm sorry, Limited Fake Danny, take us away.
All right, folks. If you like what you've heard, tell your friends, tell your family, and we'll see you. Go to revereasset.com. Don't forget to get on our email list so you can keep in sync with everything that we do on the markets. And if
I'm sorry, on the
if you like
markets.
what you heard, come on back and we'll see you next week on Your Money.
It almost sounded this. Keep Limited Fake Danny up there. It almost sounded to Limited Fake Danny as if you tried to say the word market and varmints at the same time. Like varmints are they're like mice, right? Do I have that right?
Yeah, sure.
Well, that would be the equivalent of extragenous.
Yes, that was awesome.
Varmint, market, extraneous, extragenous.
Yes.
Exogenous.
I think. What do you think, Limited Fake Danny? Do you think this year's gift should be a spice rub or mud flaps with your picture on it? That's an interview question for.
Well, it's got to be the spice rub. I mean, mud flaps. Not everybody needs mud flaps. Some people live in the desert.
All right, stock nerds, market lovers, we love you. Look, just trying to have a little fun. One last thing, I talked about peak, and let's look here real quickly at something. I wonder. Don mentioned Chevron went red. I wonder if oil's peaked. Has oil peaked? And let's look first here though at where oil is on an ATR chart. Let's do the same kind of apples to apples I was doing at the beginning of the show. And so here's oil. Oil was much higher back in March, right? And that could have been a short squeeze that drove it up because, as I've noted with the economic survey, right, it is bad out there, right? Like that Michigan survey is the gold standard. It's the one I turn to, and I've charted it over a long time. And so oil is actually down. Some would say, of course it's down today, Tim. It's deflationary what's happening out there. The buildup of inventories that Target mentioned, you think it's just Target? And so when we look at what happened, like, a little more intricacy here before I get to as oil peaked and I finish my point, I want to go back to the dollar. And so the dollar the other day on the Target day, so Target was Tuesday, I believe, Don, right? And here's the Friday, Thursday, Wednesday, Tuesday. And like dollar came up here and then it went lower. Tuesday was a good day in the market. And so why would the dollar go lower? Because it's deemed to be deflationary. A buildup in inventories, inflation's high. It's not good. It's stagflation. It's everything that was bad about the Carter years and the 1980, 1981 until the market finally turned in 82. So then, could oil be peaking? And I want to show you a chart. LYB is another chemical company. They do the plastics, and Don highlighted Dow, and he mentioned chemical companies. The only reason why I'm showing you this right now, if I can find a daily chart. Where's my daily chart? Perhaps there's a slowdown afoot in these chemical companies that use petrol. And if there's a slowdown afoot in the chemical companies that use petrol to make plastics, that lessens demand, okay? And then I want to show you gasoline futures. So gas futures are like, Tim, on a daily chart, these are just stagnant. They're not at a high. As a matter of fact, kind of got a little trend resistance there. And they're down almost 3% today, or 2.75% today. Boy, that's interesting. Gasoline is at an all-time high across this country, average $5 a gallon. The gasoline futures are actually plateauing. And that, folks, is kind of where I'm at. I'm not saying it's peaked, everything is peaked, and its happy days are here again. I wonder if we've plateaued. Is today, this week, plateau week? And then the market's just in this purgatory of a really aggressive range until we figure out what's next. That shock, if Don's right, well, not if Don's right. If there is a 1% rate raise to come, I'll leave you with this thought. That's that kind of shock and yaw. Like you got to go shock your pool to get it on green so it becomes clear again. That will cleanse, I believe, the markets. So with that, any save rounds or alibis, Don, Hunter? No? All right.
No, sir.
All right. With that, we'll see you next week on Your Money.
Barring any extragenous events.
Yeah.